Yo guys, welcome back to another video here at TraderJourney on YouTube. Thanks very much for joining me on yet another video. So today we're discussing a strategy which I use for swing trading, and I'm hoping this will be very useful for anyone looking to do some swing trades and understand the strategy which I use. So I'll be going into the details, the nitty-gritty of exactly what I look for, how I trade, and all the indicators I use for my swing trading. So hopefully anyone looking to do this will find it very useful to implement this strategy. I've been using it for about 1 to 2 years and it tends to be very successful. So and the returns on swing trading tend to be very good depending on how big the move is, but I'll be going into those details in this video. Just before I get started with the video, if you haven't checked out my Instagram, which is TraderJourney_official, be sure to give me a follow there, as I do upload daily content there for any tips and tricks for trading. So it's very useful for any beginner trader, so be sure to check that out if you haven't done so already. So without any other delays, let me talk you through my strategy for swing trading. Now with swing trading, it is different to scalping and day trading in the sense that with swing trading, you're actually holding on to trades for more than 1 day, potentially weeks, maybe even months, depending on how far out you are expecting the move to play out. So I'll be going through those details here. As you can see on this particular screen and chart, we are looking at Apple. Apple is trading near enough all-time highs at the moment. It's an interesting stock to play. You can see from just looking at this graph how much fluctuations there has been in the stock price. Coronavirus caused a sell-off in March, which is pretty much consistent with all the other tech stocks and stocks on the SP500. But we can see a lot of fluctuation going on here. There has been some rumors for Apple, such as they've rumored an announcement of an Apple car, which is huge. So based on that rumor, I mean, you'd expect the stock to surge forward and surge upwards. So let me talk you through exactly what I do to begin with. So as you can see on this chart, we are on a 1-day chart. I do tend to go out as far as even a weekly chart. So let's start on the weekly chart and show you what I do. There are obviously several drawings on here, but I'm going to remove that and start fresh for the purposes of this video. I do tend to rechart most of my stocks which I'm looking to trade consistently every week, just to make sure that the chart looks fresh and you've charted any new levels that seem to have appeared. So I start on the weekly chart when I'm looking at swing trading, and I want to start to chart up this Apple stock. So I'll start charting the lowest price it's been in, say, 6 months or to a year, and then I'll chart the highest it's been, which it was at 138.22, and the lowest it has been is 35.37. So you can see how much these stocks can go up in as much as a year. It's gone up massively, about $100, $103 in a year's time. It was lowest on the 7th of Jan 19. It's almost the new year, and we're already seeing highs of 138, which is crazy. So I'll chart the strongest lines here, strongest price levels where we've seen strong rejection and strong support. I'll simply chart those on the weekly graph. I won't look for candle crossings of more than 1 or 2 because they're such strong levels. We would expect those to hold in an everyday scenario. So as you can see, I've charted these main key levels, which as you can see, the reason why they're such important levels is because we've had such hard rejections and hard support, which is why I've only charted those on the weekly. So I'll go from the weekly chart, simply chart this. What I might do is also add one price level here. Seems to be a strong area of demand, especially from this rejection point. So I'll chart the weekly chart very simply and very quickly, and then I'll work my way down to the 1-day chart. Now the 1-day chart is the main chart you want to be looking at when you are considering your swing trading, because like I said, with swing trades you are holding the trade for more than a day, so you're expecting the stock price to move in these daily pattern ranges, in these average trading ranges within days, not hours, not half an hour, not 5 minutes. You want to be looking at the day chart. So this is where you mainly look at the key levels for swing trading. So again, similar to what I've done on the weekly chart, I will go through the daily chart starting from the lowest point, and I will begin charting some more key areas of support and resistance. Some of the lower levels won't matter so much at the beginning, but it's nice to just chart them in case you see any crashes. You know what areas of support to look for. So I'm going to try and do this pretty quickly just for the purposes of this video so everyone can see exactly what we are doing. I mean, as you do start charting levels, this becomes a lot easier and a lot quicker for most of you. You shouldn't need to spend a lot of time doing this. I mean, you should be doing this on a weekly basis at the start of every trading week, so you get the hang of it. So now you shouldn't force any of these trades, guys. You should wait for a setup, wait for all these areas which I'm going to confirm in this video before entering any trade. You need to make sure the setup is there. So once you've set up these key levels, you'll then be able to work out what sort of strategy you're going to be using. So there are still some key areas here. I'm going to start charting something more recent. Some of the more recent levels. So strong rejection here at 134.43. You can see there was some small rejection there at the same price level previously, which is good. There is a strong level here as well. And if you've got slight fluctuations in the price from a previous level that's slightly above, you want to chart that as well, just to make sure it's on your radar as well. So you can tell when we get to these areas of where there's strong buyers and sellers, you're seeing a lot of fluctuations in the price. You want to chart those as well, because that helps you understand some of the more recent changes in the price and what you're intending to see happen. So when I get to the more recent price levels in comparison to last year, I tend to chart up the levels a lot more than the historical prices, because they're obviously more relevant to the stock that you're trading in the current time. So this is the daily chart, like I said, guys. So it should be very easy to spot any key areas of support and support and resistance. I think I'm going to stop there, guys. So you can see I've charted up majority of the key levels of support and resistance. There doesn't seem to be much else here. There might be one here. So like I said, you don't need to take into consideration the historical prices too much, because it's unlikely we're going to ever have to trade at those levels. So that's the 1 day chart completely done. So you've got all your price levels set and you're ready to go. Now what's the next step? The next step is I would go down one more chart level to the 4-hour chart, and that's as much as I'd go down to. The reason being is sometimes using different charts and different hourly charts and different time ranges, you're able to see different setups happening, and you might not be able to see that on the 4-hour chart, but you might be able to see it on a weekly chart, for instance. So it's good to go down just to one more level to the 4-hour chart, just to see if you've missed anything. Now look, there are some key levels here you want to be watching out for. Look at the more recent time ranges, just the price ranges. You want to make sure you've captured as much as possible there. See, sometimes on the smaller time frames you miss a price level by a few pounds or dollars, so you want to make sure you capture those as well. So for instance here, this price level is pretty key. You can see it's passed through the wicks of 2 candles there, and potentially in the historical all-time high level area here as well. So yeah, I think I'm happy with that, guys, and we can progress to the next step. So once you've had all your price levels set from the weekly chart all the way down to the 4-hour chart, you're now set to look at where your setups are. So you can understand now, guys, that from charting these key levels, what you can also do is, if you see a major level of support, I use TradingView, and you can actually change the settings to make sure it stands out a bit more. So you can do this, for instance. So I like to chart the key levels, the bigger price levels with just a bigger line, so it stands out, and it just helps you to understand what are the weak levels and what are the strong levels. So we got a really strong level of resistance there, which is now broken through. So yeah, so the more recent time ranges, price ranges and price levels, you want to make sure they stand out from the crowd, and you can understand what is a major price point and what is a weak price point. So understand the difference and make sure you chart those on your graph. So now we've got all our price levels set up. Now the next part of this strategy is to look for patterns. So I combine several strategies to make sure the setups which I have are high probability. You see me mention that quite a lot. Now I'm going to chart up some patterns which I had already previously traded on my previous chart, but I've now erased. So I'll simply show you exactly what I'm looking for. Now if you're not familiar with patterns, I will create some content on Instagram, so follow me on there. So I'll be able to educate you guys on the different patterns to look out for and what the move you should expect to happen through each of these patterns. So simple as this, guys. You want to chart, you don't need to be so accurate with the way you chart, but they need to be as close as possible to the levels you're expecting. Okay, so here's the first pattern. I want you guys to understand what's happening here. Here you have a rising wedge. A rising wedge in most scenarios you'd expect the price to move upwards. It's a bullish setup. You're getting higher highs, you're getting higher lows, and that is a setup for a bull run basically. Now that's not to say that's going to happen every time, because I have seen rising wedges fall out, and for whatever reason, there may have been some news, there may be a market crash, the SPY might be dropping, and effectively supply is greater than demand at that point, causing the price to drop. So I do see rising wedges where prices do drop, but more often than not, 9 out of 10 times you will see a bull run, just like this example. Now you'll notice that the rising wedge hasn't been charted up exactly, like the prices don't exactly hit the level, but it's near enough and is as accurate as can be. And that is what is most important, guys, when doing these setups. They don't need to be incredibly accurate. They need to just have the concept and the strategy and a rough pattern forming on the chart. Because if you do these things with 100% accuracy, the chances are you're going to miss these patterns. Chances are you wouldn't have picked up this pattern. So you need to sort of draft out these patterns and just get them set up enough for you to make sure you play these setups. Now this setup was pretty clear, guys. As we broke above that high into the second candle, look at the move that you would have caught in this swing trade. So you would have entered the trade for a safer conservative trader. You would have entered it possibly on the second or third candle as it exited the wedge, or where you saw the most amount of volume. So as you can see, there's some huge green candle is indicating that the price is looking to move forward and push upwards. So I would have entered the trade roughly around 118.60 as it exited the wedge with the volume. So you look for volume, you look for the rising price, and that is your entry point. Now if you had entered it, say at a conservative level of say 120, say you just wanted to be ultra conservative with the entry point from 120, you could have rode this price up. If you went heavy with say 2 or 3 contracts, you could have sold here at 125, then you could have rode it up, and then you could have reached a possible high of 128.68. Now that is as simple as it gets, because you spot the price level, you secondly look for the pattern of the trade, you thirdly look for the volume, and you can always combine this strategy with any other indicators that benefit you, because some of you traders who are more experienced may have another indicator which could help you. And as you can see from, you can't make this up, guys, because I have set these price levels. I've done this in a staged process. So I've set the price levels through each of the time frames. I've looked at the patterns, I've looked for volume, and I've looked at the key area breakthrough of the price level. So what I had charted here, guys, was 117.75, and as soon as it broke, it went to the next area of resistance, the key main area of resistance which I had charted. So all these price levels which you have charted are essentially your profit targets. So as it hits each of these profit targets, you can start selling a contract. Say if you bought 3 contracts, you can sell one, let the other 2 run. As soon as you hit the next profit target, sell one and let the last one run. And the last one could potentially have reached the all-time high at that point of 128.77. And that is simply from trading that pattern. Now this pattern is seen on the 4-hour chart, but you could have in fact used the 1-day chart, which is what I generally use. And you'll be able to see the pattern a lot more clearer from this pattern. So look how clean the rising wedge is on the 1-day chart, which is what I would have spotted this on. You can clearly see that this pattern was also clearly visible on the 4-hour chart, but looking at the pattern on the 1-day chart gives you extra. I think it's a better way of trading for swings rather than the 4-hour chart. So that is a perfect example of a pattern there. I'm going to do one more for you, and that is a downward trend which I spotted, and that happened on the 12th of October in the October period. So what I also like to do is spot downward trends and upward trends. The rising wedge could be seen as an upward trend, but here is a clear example of a downward trend. So I'm going to clearly draw this up really quickly and show you how quick and easy this should be. It shouldn't be a long exercise. It should be something that your eye will slowly get trained for to see. So as you can see, Apple was clearly in a downward trend here. You can change the graph to suit you how accurate you want to be, how accurate you want it to be. So as you can see, Apple was in a huge downward trend all the way from 9th of October all the way down to the end of October. So the whole of October was a downward range for downward trending range for Apple, and what I want to do is wait for the break of that trend. A downward trend is never going to last months or years. It's going to break out at some point, and when it does break out, you're going to expect a good move. So with this particular downward trend range, it was happening for a month, so you'd expect the breakout to take at least a couple of weeks before it actually works itself out. Now if you entered, as again like I said, you've got your price levels there to help you. So this price level of 112.66 would be my breakout level as well as my stop loss. So that is a very, very key thing. I didn't mention that with the downward wedge, with the upward wedge on the previous pattern, but here for instance, this price level should act as your stop loss. So you would have entered the trade as it broke that price level, and then you would have rode it up all the way up to 119. So you would have entered say around 112. That's a $5-6 move, guys, and a lot of you inexperienced traders wouldn't understand the profit that would be associated with a move such as that. But when you're talking $4 or $5 moves, it's huge. The profit's huge, the profit is good, and it's enough for you to make a good amount of profit just trading these patterns. So I would have entered at the break of that price level, which we had already charted, which you should have already charted on your graph. And the price levels are essentially helping you to understand your entry and exit points, and combining that with your patterns it helps you understand the bigger picture. Now if you were to look at these patterns on, for instance, the 30-minute chart, you wouldn't be able to see it because you've got so many price levels, so many fluctuations in the price that you would just fail to see these patterns forming. So it's very important that you look at these patterns forming on the larger time frames, the 1 days, the 4 hours, the weeklies, and it just helps you understand what is actually happening with the stock and what is the bigger picture. So like I said, I would have got a contract expiration of at least 2 weeks out, maybe even a month out, just to make sure that play happens, and you give it enough time for the play to happen. and as soon as it hits these profit target levels, you can then start to secure those profits. It's important that as it hits these price levels, you are securing profits. It just helps you reduce any risk of the price reversing, because as you can see, what happened later on, 2-3 weeks later, the price returned to that breakout level, and it would have potentially, it may have just avoided your stop loss if you had entered at the price level suggested here, but then it went on to go further up. So if your stop loss was appropriate, then you may have even caught a much bigger move, double the move that initially had happened. So it's all part of the process, guys, of understanding these patterns and swing trading. But again, there's so much more you can be looking out for. Now, as Apple approaches that all-time high level, you can see it's in an upward trending range. I'm going to quickly chart that up here for you guys so you can understand and see that exactly for me. As again, like I said, it doesn't have to be completely accurate, but it has to be accurate enough for you to understand the play. So you could say that is a maybe upward trending range / upward wedge, whatever you want to call it, but you can tell it's trending upwards. It's trending upwards and potentially will reach all-time highs again, or maybe even break. Now, what's key to understand as well is in upward trends and downward trends, you can still see breaks to the upside or the downside. So you just have to wait for that breakout, wait for a second candle, wait for volume, and enter the trade. Set your stop loss, and that is as much as you can do. You have to accept there's going to be some amount of risk, but combining all of these strategies and indicators and patterns and price levels, you are setting yourself up for a very high probability trade. So it's trending upwards, guys, and if this breaks down or hits all-time highs and rejects like it has done, again, you can even combine the strategy of supply and demand, which I always talk about. You can even say that this is a potential supply zone. So if it hit that all-time high level and rejected really well with good volume of sellers, then you should expect this to come back down to another area of demand, which is what we saw here. So you can see how easy it can be to trade. You shouldn't make it overly complicated. It should be an easy thing to do, and these things should be easy for you to spot. So it's as simple as that, guys. And if it breaks through this supply zone, we could see huge projections to the upside and potentially newer all-time highs. So very exciting stuff for Apple. It's one of my favorite stocks to trade, and you know, it's this sort of strategy that can make you very successful in trading. So that pretty much sums up this strategy, guys. I hope that makes sense, and I hope I've not rambled on too much, and I hope I've said it in the most simplest way as possible. If anyone's got any questions, be sure to hit me up on Instagram and let me know in the comment section below if there's any questions you might have as to this form of trading. But I've only mentioned a few patterns in this video, but there's several patterns you can look for, such as head and shoulders, triangles seem to be very popular, wedges, upper trending ranges, lower trending ranges, and double tops or double bottoms. Like here, there was a double bottom, guys. This is a clear pattern. It came down, went into demand, broke up, went back into demand. That's a double dip, and it continued to rise. So double dip, and that's what you tend to see here. So you can get familiar with more patterns. There are so many more other indicators and strategies which you can probably see on this chart here, but I combine so many different types of strategies. It just helps me make my trades a lot higher probability trades, and it's how I trade. I don't overcomplicate things. I keep things maximum to 5-6 indicators strategies, so it doesn't confuse the overall trade. But that hopefully sums everything up, guys, and I hope you really made some notes and took some value from this video. Be sure to hit me up on Instagram, give me a follow there, make sure you hit the subscribe button if you did get any value from this. Be sure you drop me a like, and I will catch you all on the next video. Thanks so much for watching. Take care. Goodbye.